Have you been working from home due to the coronavirus? Are you unsure of what you can or can't claim as a tax deduction? In this video, we're going to look at home office deductions and get an answer to the questions you might be too embarrassed to ask your accountant. Like, can you claim your COVID suit as a uniform expense? And can you claim your UGG boots as safety equipment? Okay, so you've been working from home and now you're looking around your home office, wondering what you can claim as a tax deduction and what you can't. First, to help narrow it down, the ATO have 3 golden rules for claiming work-related expenses. Rule number 1, you must have spent the money and not been reimbursed. So if your employer pays the money back to you, then it's not a deduction. Rule number 2, the expense must be directly related to earning an income. And rule number 3, you must have a record to prove it. If you can answer yes to all 3 rules, the expense is probably deductible. However, the devil is in the detail. So let's look at some questions and examples and we'll see how we go. Can I claim my rent or mortgage? No. Well, probably not. Most employees are only able to claim running expenses and not occupancy expenses. So things like rent, mortgages, or insurances generally won't be deductible, even if you're forced to work at home due to corona. If you run a small business from home, you may be able to claim occupancy costs. However, tread with caution. If you own your own home, this might increase your capital gains tax in the future. Can I claim electricity and heating and other running costs? Yes. Let's say you've been spending more time at home and therefore you've had the heating on more if you live in Melbourne, you can claim this. There are 2 options when it comes to claiming running expenses. It is called the actual expenses method or the fixed rate method. Actual expenses is where you itemize and work out every little sort of percentage and everything you spend for each item you've used for work. Working out these percentages can be a bit painful, so the ATO have come up with a simpler way called the fixed rate method. As long as you have a dedicated work area at home, you can use the fixed rate method, which is a flat rate of 52 cents per hour you've worked from home. So if you've worked 8 hours a day, 5 days a week for 16 weeks, that would be $332.80 as a deduction. Does the fixed rate method include phone and internet? No, it doesn't. You're able to claim your telecommunications as well. However, again, it's as a percentage of work use. So let's say your internet costs you $100 per month, and over the last 4 months while you've been at home, you're using 50% of it for business use. That means you can claim $50 across those 4 months or $200. Next, I swear this is a real question. I'm spending more time at home and thus I'm using more toilet paper. Can that be a tax deduction? Sorry, I'm afraid not. Personal expenses like toilet paper, tea, coffee, milk aren't tax deductible, even if it was something your employer would have been giving you if you were in the office. So those COVID suits and work boots, unfortunately, are not deductible. The boss wanted video meeting, so I had to buy a webcam. Is that deductible? Yes, but there are a few things to consider. Like if you are sharing it with the kids who are also doing homeschooling, so again, you've got to look at that business percentage. Anything you buy that is claimable and under $300, keep the receipt and you can deduct it in one hit. However, if you've bought anything like a computer or an iPad that is valued over $300, you'll need to depreciate them, which basically means you have to split up the cost of the claim across multiple years. There are different depreciation methods and time periods. The ATO website can help, or if you have some larger items, this is a really great trigger to say, hey, I do need some help from an accountant. Are there any changes to tax returns due to corona? Yes, there is one change, and they are calling it the shortcut method. So if you've been working from home between the 1st of March and the 30th of June, you can make all of this all a bit easier. And instead of recording every single little purchase and phone and working out all the percentages, the ATO has said you can use a flat rate of 80 cents per hour. So it's similar to the fixed rate method we talked about before. However, it includes are the additional running costs. So things like your phone and your internet. So the good thing about this method is that both you and your partner can claim the 80 cents per hour, and it's easier. However, the downside is you might have more deductions if you work it out the long way. If it was me, I'd be doing the maths but using both methods and pick which one suits you the best. What are some other common deductions? So there's a bunch of other categories that I haven't talked about that you could potentially claim. They are including but not limited to travel expenses, vehicle expenses, laundry, self-education, professional registrations and membership fees, union fees, courses or conferences, charitable donations, super contributions, income protection, and if you paid an accountant to have your tax done last year, well, you can claim that this year. What proof do I need? If you claim a deduction, you must have records to show how you calculated your claims. A common form of proof is, of course, a receipt showing who, when, what, how much, etc. You need to keep your receipts for 5 years. If you plan on using one of the fixed rate calculations, you'll need to record how many hours you worked at home or record a diary over a 4-week period to show a pattern. What are the warning signs the ATO are looking out for? There are some big red flags that the ATO have said that they're keeping an eye out for. First, they will compare your tax return to other people in similar circumstances. If yours is a lot different, you might get a knock on the door. Also, the ATO are expecting tax returns to be different this year. So like your car expenses should probably go down for a lot of people. You can't photocopy last year's tax return. So standard claims and deductions, like the same round figure every year, will also be tracked by the ATO. What should I do with my tax return? This year, you might be getting a larger tax return than normal and wondering what you should do with it. There is no right answer here. Paying off debt is always a good start. Investing is also a great option. If you are looking for some advice, you can jump on our website and book a video meeting directly in with me, and we can have a chat about your personal situation. Should I see an accountant or do my own tax return? Doing your tax return has never been easier. The MyGov portal is great and it's pretty easy to navigate. However, this year you probably will have some extra deductions, and an accountant only really needs to find 1 or 2 extra things to pay for their services. So I'm saying yes, this is a great year to use an accountant, and any fees, as I was saying, that you pay an accountant this year are deductible next year. If you don't have one, we know heaps of accountants and we're happy to give you a referral. Just shoot us an email to info@whatifadvice.com.au. Just add in your accountant referral in the subject line and maybe let us know where you live, suburb, etc. and we can send you a few options. That's it for our working from home tax deduction video. Check out one of these other videos, and as always, please subscribe to our YouTube channel, like us on Facebook, and good luck in the new financial year.